right? Yeah. Okay. What is good, beautiful people? How y'all doing today? As y'all can see, we on day 4 of learning how to trade. So I ain't gonna waste no time. I didn't stream yesterday at all. Yeah, I didn't stream at all yesterday. Today was just kind of like a chill, laid back type of day, for real, for real. Um. Oh, that's why people. Okay. Mm, all right. Anyways, I'm gonna go ahead start up. Last time I streamed, we was learning about some type of like, what was it called? Compare. It was where he was comparing the two graphs. I didn't understand that at all. So we learned imbalances, BPR, all of that, equilibrium confluence. And that's the last thing I have notes on is the equilibrium confluence. So I am going to um, there we go. All right, cool. I'm gonna go use the bathroom before. All right, I'm gonna go use the bathroom before I get started, and then we're gonna go ahead and get into where we left off. So, um, hold on. We got a comment on one of the songs I dropped in a new album. I'm gonna go look at that real quick. This sound shouldn't say. This sound shouldn't stay stuck. You the best. Okay, we talk about music when I first started, gang. I thought that was on the new album. Wait, can y'all see? Y'all can see my screen. Okay, look, I'm gonna show y'all. This the new album right here, chat. This the new album right here, chat. This the new album right here, chat. I'm gonna play a little bit of it while I'm in the bathroom. Alright, cool, 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 cool. Nigga might die. Way too fried. Free beer. I'm alright. Alright, anyways. I'm gonna go ahead and get into the education. Go ahead and get into the education, twin. Education. Really, we got to add, bro? I already wrote this down, but we're gonna rewrite it. Alright, I wanna see what he's talking about. I wanna see it for myself. What's up? What's the deal with this? Mm, I don't know if I'm even on the right thing to be shares trading. Nvidia, Apple, Microsoft. Okay, so we're gonna go with Nvidia, which for us is, you feel me? It's a little. We're also gonna look for Apple, and we'll go ahead do that. Just Nvidia, and then auto scroll, show positions, enable timer, graphic display, price increase. We go with a blue, price drop, go boom, go like that. Nope, I don't want to use default colors, brother. All right. Why is it being slow, bro? Between UTC4, UTC4, UTC minus 4, UTC minus 4. So we good. Sound control. Put it on our light theme. And then change our colors to a black. That way they can be seen better. And there we go. We got our new trade. This is trading shares. We have our okay. This right here is a good example of our daily gap. What is that called? Our daily fair value gap. Our new day fair value gap. Right? New day opening gap. New day opening gap. We have a balance of 10K. Shares trading demo. Outside trading hours, it'll, okay, so we are outside the trading hours for NVIDIA. It's currently, okay, so they don't trade. What is open right now? Go ahead and switch back to the quick trade. I need to run up 100K on a demo account. Oh, this shit being so slow, bro. What about luck? We're gonna slide. Niggas all tough on the internet. Be tricking up on these bitches, but I'm not into that. You want no one, I ain't about to be shit. Gripping on grip behind that. They don't want love, they just want. I just want my neck iced out while I'm on set. No. That be better, that bitch ain't got pretty toes. Start the flow. I'm gonna beat the bitch up. On these pipes, I'm trying to fuck. Turn that bitch to try her luck. And I may throw her up. My might just stuck. How could I say shit stargazing?
I've been celibate for a year. I'm so tired of masturbating.
They're still faking. I'm still, I'm faking. I hate a bitch that like to lie. And worst of the world, but I got vibe on my side. And it ain't up. Good damn, the audio low as fuck. My town in a big ass Tonka truck. For real, cause this bitch slow as fuck. Don't give me brain, but I might, yeah. I'm not into that. I got niggas that keep it straight. I might have been on the hoe. I might have been on the hoe. I might have been on the throat, huh? When it's a rubber testing, it's a little bit so. You left a little bit soft. You left a little bit soft. I'ma tell
Let go. Hop in the whip, we gon' go to the store.
why is it still loading, bro? This shit's annoying.
I got bars with no internet. Bitch, I ain't need no parts. Love, bitch, I'm not into that. Can you please just top me? She sit on top, it's like a cherry. She my favorite top bag. Love it when her pussy hairy. Jumpin', you can't find me. I go right to the top so I can jump skydiving. She a role play, she a freaky bitch. This not 5M. He say he a dog. Damn sure got some bitch in him. That little bitch a paw. She gon' shake her ass on the camp. Do not call me brother, cause little bitch I ain't enough your fam. Make that little bitch whine like a dog. That bitch getting round. Love it when she send me pictures of her feet toes in the sand. I might pull up, 5%. Wanting me to be her man, but I can't. But I can't do that. But bitches so stupid. I just tryna get some pay. I'm so hungry, you would think that I need ya. I got bars, no Wi-Fi. I ain't need no proxy. Steph Curry with a 3. You shoot him if he cross me. Break her ankles, now she's on her knees. That bitch try to top me. I done fed the bitch some dick, got a little bit hungry. I got bars with no Wi-Fi. I ain't need no proxy. Niggas hating on the net, they really need to stop it. That bitch wanna trade, fuck around, might take her go shopping. Hey, gang go stupid, they go dumb, go retarded. Hop in the whip, let's go. Hop in the whip, let's ride. I think I'm better off alone, ain't no bitch by my side. I've been celibate too long, got pressure in these pipes, yeah. But fuck the less, I just want love, but I ain't tryna fight, ain't tryna fuss. I'm just wanting all the bases, I want much. I just want yellow back her, I can stress. I just want my own bitch that I can take, yeah. Hop in the whip, let go. Hop in the whip, let ride. I think I'm better off alone, ain't no bitch by my side, yeah. I can't wait to hop up on the ice so I can fly. Bitch, you know this beat done fucking all the airlines. They take off the turbo spin. I took so many losses that I'm destined to win. If you gonna bring that bitch, then tell her bring a friend. Lord, just please forgive me for all these fucking sins. There's so much going on inside my head. My demons scream my name, they really want me dead. Turn the headlights off and match the gas to duck the feds. I'm ready to die, ain't got no bitch waiting in bed. When I'm stuck inside my mind, that girl won't kiss me on the head. She left a void inside my heart, might fill that bitch with lead. She made it hard for me to trust, can't believe nothing she said. Hop up in that motherfucking Audi when I see red.
I want you to know. Oh shit. The walk getting in, I'm living in hell. I'm living in hell, alright. If I ain't demons, I don't wanna fight. I'm born the same, I'm paying the price. You your eyes off the light. Or just giving me hell tonight. Turn in the show, make it right. Turn in the show, make it right. Just in the show, make it right. Just in the show, make it right. Alright, 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 alright. You make it right. You make it right. Tell me, do you ever feel like you're stuck in this cycle? What they call life, but it don't feel real. Yeah. Born no pain, the passion, living love and life. Bro, I ain't gonna lie, this album's so tough, gang. The song, like, the songs all in, like, got some more, uh-huh. Before I start to talk I'm trying to take some loose pay and turn it to a brick. My phone so make sure I'm straight, make sure that shit great. Said I eat that noodle so I can wake up to a state like what the. Mhm. 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 It's time for training and I'm here to lock it in. I'm here for. I ain't here to make no friends. You'll be the last one in the end. When I put work in, that's very short. To a evil hole, she not stuck in the. Let go. I put that shit in my fraud, and then that shit nigga might die. Freak bitch right in my thought. Having the right. I'm on the internet. The internet. That bitch ran up, that bitch ain't got pretty tall. Bro, my platform not working, gang. I might throw her up. I might just get stuck. Up and up, stargazing. I've been for you. I'm so tired of.
Nigga ain't keeping it real, the movie is over and niggas is still faking. I don't even give no fuck about the law, little bitch, I'm still baking. Bitch, I'm still getting high. I hate a bit, they like to lie. Niggas is worshiping Satan, they worship the world. But I got God by my side, cause he lift me up. But I still get low, cause damn the audio low as fuck. You might catch me riding in a big ass Tonka truck. Niggas don't wanna line it up, for real, cause they shit slow as fuck. I want some knowledge, told her give me brain, that bitch try to suck me up. But I'm not in it right, I know niggas that keep a stride. I'm at the fuck let go, I'm about to fuck on the hoe. I might put dick in her throat, I think the bet needs some rubber tussle. The dick looks a little bit so. It looks a little bit so. It looks a little bit so.
I don't know how to snipe.
Try to let go. Hop in the whip, we gon' go to the store.
After this album, bro, we're gonna go back to the.
I got bars with no internet. Bitch, I ain't need no pause. Love, bitch, I'm not into that. Can you please just tie me? Sit on top, it's like a cherry. She my favorite top bag. Love it when her pussy hairy. Jumping, you can't find me. I go right to the top so I can drunk skydiving. She will role play, she a freaky bitch. This not 5M. He say he a dog. Darren sure got some bitch in him. That little bitch a paw. She gon' shake her ass on the camp. Do not call me brother, cause little bitch I ain't enough your fam. Make that little bitch whine like a dog. That bitch getting round. Love it when she send me pictures of her feet toes in the sand. no proxy. Niggas hating on the net, they really need to stop it. That bitch wanna trade, fuck around, might take her shopping. Hey, gang go stupid, they go dumb, go retarded. Hop in the whip, let's go. Hop in the whip, let's ride. I think I'm better off alone, ain't no bitch by my side. I've been celibate too long, got pressure in these pipes, yeah. But fuck the less, I just want love, but I ain't tryna fight, ain't tryna fight. I'm just wanting all the bases, I want much. I just want yellow back where I can stretch. I just want my own bitch that I can take, yeah. Hop in the whip, let go. Hop in the whip, let ride. I think I'm better off alone, ain't no bitch by my side, yeah. I can't wait to hop up on the ice so I can fly. Bitch, you know this beat, I'm fucking all the airlines. They take off the turbo spin. I took so many losses that I'm destined to win. If you gonna bring that bitch, then tell her bring a friend. Lord, just please forgive me for all these fucking sins. There's so much going on inside my head. My demons scream my name, they really want me dead. Turn the headlights off and match the gas to duck the feds. I'm ready to die, ain't got no bitch waiting in bed. When I'm stuck inside my mind, that girl won't kiss me on the head. She left a void inside my heart, might fill that bitch with lead. She made it hard for me to trust, can't believe nothing she said. Hop up in that motherfucking Audi when I see red. Feel like you're stuck in this cycle, what they call life, but it don't feel real. Damn, I'm so stuck in this cycle, I need to be free me from this jail. I swear that shit fucks with my head, the walls caving in, I'm living in hell. I'm living in hell, alright. Fighting demons I don't wanna fight. Do not tell me it's gonna be alright. I was born this and now I'm paying the price. If you live in the dark, keep your eyes on the light, cause you got a mission, you can't lose sight. Lord, just stay with me all through the night. I trust in it and that you will make it right. I trust in it and that you will make it right. I trust in it and that you will make it right. I trust in it and that you will make it right. I trust in it and that you will make it right. Feel like you're stuck in this cycle, what they call life, but it don't feel real. Damn, I'm so stuck in this cycle, I need to be free me from this jail. I swear this shit fucks with my head, the walls caving in, I'm living in hell. I'm living in hell, right? Fighting demons I don't wanna fight. You gotta tell me it's gonna be alright. Born this and I'm paying the price. You live in the dark, keep your eyes on the light. You got a mission, you can't lose sight. Lord, just stay with me all through the night. I know in the end you'll make it right. Tonight, I trust in it and that you will make it right. I trust in it and that you will make it right. I trust in it and that you will make it right. I trust in it and that you will make it right. I trust in it and that you'll make it right. Alright, 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 alright. You'll make it right. Tell me, do you ever feel like you're stuck in this cycle, what they call life, but it don't feel real. Damn, I'm so stuck in this cycle, I need to be free me from this jail. I swear this shit fucks with my You gotta tell me it's gonna be alright. Born this and I'm paying the price. You live in the dark, keep your eyes on the light. You got a mission, you can't lose sight. Lord, they stay with me all through the night. I know in the end you'll make it right.
Best song on the album by far got to be.
My crown, fingers lame me fuck, I still my shine. I've been on my ass so long, I got pissed to gas some more. I ain't playing no games no more, gotta make sure my cash get longer. Found myself stuck in the ditch, I had some ways that I had to switch.
Alright, enough of the album, I'm tripping. Alright, let me go ahead.
Talking about some funded accounts, the best prop firms for you guys to use, and then
this is
all
ballin'.
good. So, I mean, shit, dude, that was pretty freaking simple class today, but that's really all that we need to cover. Tomorrow we'll be going over very briefly, talking about some funded accounts, the best prop firms for you guys to use, and then from there, we can actually start putting stuff together in terms of like strategy, how to actually take trades and putting all of this stuff together. But first, I want to introduce funded accounts to you guys and explain kind of in depth, because a lot of you guys are getting into these funded accounts with like literally no knowledge of like what the risk parameters are and like what risk you're actually taking on when you buy the funded account and understanding all those rules. So I want to make sure that that is very clear for you guys before you guys jump the gun and like start a live account or start trying to trade on a funded account. We'll go over brokerage and we'll also go over fundeds in that video. So that being said, love and appreciate you boys. I'll see you guys tomorrow. What's going on, guys, and welcome to the funded account portion of the path to profitability. So in this video, I'm going to be explaining what funded accounts are, how you guys can use them to your advantage if you are somebody with low capital, which again, the vast majority of us when we were starting trading, and for you guys getting into trading, you guys don't have a lot of capital to start with, so it's difficult for you to be funding a live account with the small amount of money that you guys have right now, which, okay, that's, you know, completely fine. There's no shame in that. These companies, these prop firms are going to be a huge tool for us to be able to scale our capital fast, for us to be able to leverage their capital and be able to pay a small amount of money from our low amount of capital to be able to leverage and trade with a high amount of capital through these prop firm account challenges. So with that being said, let's talk about what prop firms are. So prop firms are essentially a company that we can pay a small fee to, where they are going to give us a trading challenge. And within this trading challenge, we have to just be able to pass and hit a certain profit target without going down and losing a certain amount of money, which is our drawdown. Now, each one of these prop firms is going to have different sets of rules. There's also different types of accounts on every single prop firm. There's some prop firms where you don't even have to pass a challenge in order to get live funding, but there's stricter rules in order for you to get a payout. Now, again, before we go into that, what I want to explain to you guys is why this is beneficial for you guys as lower capital traders. So most of these prop firms have $50,000 accounts, $100,000 accounts, $150,000 accounts, $25,000 accounts, right? And that's a much larger amount of capital than you guys are typically going to be able to afford, right? On just a regular live account. Do you guys have $50,000 that you can just send straight out from your bank account into a brokerage account? Probably not. Do you guys have $100,000 that you guys can wire straight from your bank account into a brokerage account? Probably not. But these prop firms, they are going to give us the opportunity to be able to be trading with that amount of capital. But first, we have to prove that we are able to pay with that amount, trade with that amount of capital by trading and passing a trading challenge. So again, depending on what prop firm you use, I'm going to go over two prop firms that are very good, some of the biggest leaders in the industry, and we're going to break down some of their accounts. But depending on what prop firm and what company you decide to go with, then their account challenges are going to be built out a little bit differently. There's going to be some that are more expensive than others that might make it a slightly easier for you to pass, that maybe give you a higher potential payout. There might be accounts that are a little bit cheaper, but it's a little bit more difficult to pass, and the payout cap is a lot tighter, where let's say I'm on a $50,000 account, a $50,000 funded account, and I only pay, let's say, $79 for it. Then the process of being able to pass that challenge and then get to a live account to then be able to potentially make money and then request a payout from it, you are going to have a slightly more difficult time. And then on top of that, the payout that you're going to be able to potentially receive is going to be slightly smaller than something that costs a little bit more, that you're pretty much paying for a slightly easier challenge for you to pass, and then also a larger payout cap. So with that being said, hopefully you guys have already heard about prop firms. And if not, hopefully that was a good explanation of, we are paying money to be able to prove that we are profitable. So this is very, very key. Before just jumping into prop firms and into buying all these accounts saying, I can't wait to make $2,000, or I can't wait to make $5,000 from this prop firm, from this prop trading account, because they're giving me all this money to trade with. Yes, that is the case, but you also have to understand, not many people are able to pass these account challenges, and it's for a good reason. It's because you genuinely have to be good at trading in order to pass these challenges. Now, as you guys know, throughout the past 12 days, we've been talking about all of these different things and different confluences to help you guys get good at trading, but also we haven't even discussed strategy yet. We haven't discussed risk management. We haven't talked about entries and exits. Okay, so if you guys are brand new beginners starting from day one all the way up until this point, you guys aren't even fully there yet in order to be able to buy one of these things. But again, like I was saying at the beginning of this video, it is a super valuable tool that's going to help you guys scale up your capital very quickly. However, what do you need before that? You need to have the skill of day trading. Let's think back to day 2 of what even is trading. What is trading all about? It's being able to predict with a high probability where price wants to go on a daily basis, right? And if we're unable to do that, then we are going to be unable to pass these funded account challenges, and we are going to be unable to make money from the markets. Because in order, just like on a live account, just like on a demo account, just like on a prop trading account, in order to make money, in order to have a positive P&L, you need 1 trillion% need to be a good trader. Okay, point blank period. You need to have the skill of trading. So with that being said, let's show you guys 2 of some of the best prop firms within the space, and let's go over their rules and why these are going to be beneficial for you guys. So the first one that we have here today is Alpha Futures, okay? And the nice thing about Alpha Futures, again, and they have it on their very front page, is they have the largest payout cap. Okay, so as we can see here, the industry normal is around $1,200 to $5,000 max withdrawals at all these other prop firms in the space. However, with Alpha Futures offers a max withdrawal of $15,000 per standard or advanced account, which is pretty insane. And that's why they are one of my top choices for prop firms to recommend to you guys. Okay, so again, like I mentioned, there's several different plans and they all are useful for different things. So this one right here is the Alpha Zero plan, okay, which means that there's 0 activation fee, okay? And what are the account sizes that we can choose from? We can choose from a $50,000 account and a $100,000 account. And again, like I said, all of these different account styles, the Zero plan, the Standard plan, and the Advanced plan, they all have different rules and they all have different regulations that you need in order to be able to pass, in order to be able to receive a payout. And there's nothing to say that, oh, this one's better than this one's better than this one. It really just depends on your trading style, and it really depends on what you are trying to do with the account. So just like I was just saying that there's no like definite this one's better than this one, but the vast majority of people when they are trading on Alpha Futures are typically going to be trading on the Alpha Futures Advanced plan. Okay, people across the industry say the Alpha Futures Advanced accounts are some of the best accounts, and it's because of that massive payout that you can receive. Okay, so we can see that there's an evaluation phase. You have to be trading for a minimum of 2 days. Your profit target, so again, this is your evaluation. This is your challenge. Your goal on this $100,000 account is to make 8%. You need to make $8,000 on your $100,000 account. On top of that, your maximum position size that you can enter in is 10 contracts. So you are going to be able to enter in with 10 contracts maximum per trade. And trust me, guys, that is plenty of contracts for you guys to be able to trade, unless you guys are trading on like the seconds time frame, trust me, 10 contracts is plenty to trade with. So this is not limiting you whatsoever. And then the max amount of drawdown that you can go down is $3,500. So what does that mean? That means if I'm trading on my $100,000 Alpha Futures advanced plan account, that means I cannot have the account go down to, what is that, $96,500 in total equity or balance, okay, or else I lose the challenge and I end up failing. And if I fail, then this money goes down the drain. And we're actually going to talk about that in our risk management lesson, talking about how you guys can actually manage your risk when you guys are buying and paying for these prop firms, because you guys have to understand, a lot of people think that these prop firms, like, they don't cost any money for whatever reason, because they're just thinking about the potential payout that they can get from them. But at the end of the day, it is very real money that you're putting on the table. And a lot of people don't realize that it's real money until after they blow the account. And then they're like, wait, I just lost $279. I'm going to freak out now. Okay, so let's not do that. And again, during the challenge phase, there's obviously going to be no profit split, because during that time, you are just trying to prove to the prop firm, in this case, it's Alpha Futures, that you are a good trader in order to be on a qualified account, so that you guys are able to get an actual profit split. You can reset the account for another $279, which means, again, if you fail and if you hit this max drawdown, then you can reset it for the same cost, which is nice. There's no daily loss limit, which is nice. And again, like I was saying, depending on what prop firm you use, Alpha Futures is one of the more expensive prop firms in the space, but it's for a good reason. Not only is it for a good reason because you can get the largest payout in the space, but also you have a very big consistency rule. Okay, most prop firms are anywhere from like 30 to a 40% consistency rule. In this case, Alpha Futures is a 50% consistency rule, meaning in order for you to pass the evaluation phase, you need to be able to split your winning profits across 3 trades at the minimum, okay, in order for you guys to be able to pass with this consistency rule. So it pretty much means you can't have the vast majority of your profits being over 50% in order to pass this challenge. Okay, from there, there's also some other rules, like, yes, you are able to hold through news. Now, I don't want to bore you guys and stay on here and just go over, hey, this one, it's this one's, it's this. I actually have a free doc for you guys that is going to have the information on all of the Alpha Futures accounts, and then also all of the Tradeify accounts, which is the prop firm that I'm going to go over next. That is linked down in the description. So if you guys want to go to that Google Doc and you guys can click on it, you guys can download the PDF. It breaks down pretty much the pros and the cons of every single account that these two prop firms have. And on Tradeify specifically, they actually are doing something really sweet for you guys by making it for this video and for me only. If you guys want, there's a one-time use code of TJR40 for you guys to be able to get a 40% discount on literally every single one of these accounts. So you guys will be able to get a 40% off discount on a growth 50K account. You guys can get a 40% discount on a select 150K account. You guys can get a 40% off on a Lightning 50K account. Okay, it doesn't matter. It's one-time use per person though, not per account. So I can't just buy a Lightning 50K account. That's 40% off, and then a 25K account. Okay, code TJR will save you 30% off after that. But there is a one-time TJR. The code is TJR40. That is going to save you guys 40% off. It's a one-time code that you guys can use. That is going to be activated for this video and probably will only last till the end of today. So take advantage of that. This is like literally the biggest sale that they have done, and they gave it to me for this video, which is really, really awesome of them. Now, let's get into their accounts. Again, if you guys want to look through the Google Doc and do a compare and contrast of all the pros and cons, I've already laid it out in there. But Tradeify, their best accounts are going to be their instant funding accounts. Okay, a lot of people will choose between their select accounts or their Lightning accounts, which gives you instant fundings. Okay, the select accounts are great as well because you have the opportunity to be able to get daily payouts, which is pretty sick. Okay, so if you're trading on a $150,000 account, and you're able to pass this evaluation, you can literally, one, be able to pass the evaluation in the span of 3 days and then be able to be qualified for a payout in 4 days. This is one of the only prop firms in the industry where you are able to start an account challenge on Monday and then be able to receive a payout by Friday by going through with the select accounts. Now, the Lightning instant funding accounts are very, very interesting because, like I was saying at the beginning of this video, there are some prop trading accounts that you do not need to pass a challenge in order to jump onto a live account. So again, typically how the prop firm industry works is you pay money to be able to take the challenge. You take the challenge, you try and pass. If you pass, awesome, they move you onto another account, and then on that account, you're able to earn money on that and you're able to request a payout. However, some prop firm companies have these instant funding accounts where they say, hey, if you truly believe in yourself, we're going to give you a very large one-time fee. And if you guys use code TJR, then you guys are going to get or if you guys want to use code TJR40 for these Lightning accounts, you guys can save 40% off on a one time. Or if you guys are using this a second time, you guys can just use code TJR. You guys can also use code TJR on Alpha Futures. Forgot to mention that, to be able to save 10 or 20%. It depends on what account that you guys are choosing. Code TJR on Tradeify saves you guys 30%. So again, use my name all across here. You're going to save a whole bunch of money. But Lightning funded accounts are very, very great because you do not need an evaluation. There's no evaluation. You just instantly jump in with funding. Now, don't be fooled. You still have to be good at trading. You're probably saying, well, I suck at trading. I'm just going to take the one that you don't have to do a challenge in order to get funding for. Well, that's the thing. On this, there are some rules still set in place for you guys in order to make it not difficult for you guys to be able to get a payout, but there are some rules in line that are, I guess, make it so that you still have to be good at trading in order to be qualified for a payout. Now, what are some of those rules? Well, the payout frequency, there's a 5-day payout frequency. You can only have a max amount of 5 accounts on this, but the big one is the 20% consistency rule. So that means you need to, at minimum, what is that going to be? Around like 5 or 6 trades that encapsulate the total amount that you are requesting a payout for. So again, this 20% consistency rule is very, very different from the Alpha Futures 50% consistency rule. And it actually, when you think about it, in terms of risk and trades required to reach a payout, it ends up pretty much being the exact same thing. Because on this, you need a minimum of 2 trading days, and we know that it's going to take a minimum of 3 trades in order for us to be able to pass this. So that means there's three trades at the minimum for us to be able to pass the challenge, and then for us to be able to be qualified to, or for us to be able to trade on the qualified account and then be able to receive a payout. There's no consistency rule, but we need a minimum of 5 trading days. So really all that we need to do is we just need to win on 1 trading day. So that means 4 trading days total. And then just do like the bare minimum required to be able to hit these trading days. So realistically, you're taking 4 trades in order to get a payout on the Alpha Futures advanced plan. And you're needing 6 winning trades in order to get a payout on the Tradeify plan. So at the end of the day, it ends up being pretty much the same, whether you're passing the challenge and then going onto a live account and then getting a payout, or skipping the challenge phase and just jumping straight into funding due to this consistency rule. Now, again, I'm here and I'm unbiased for you guys. Personally, I think it's better to go with something like a select account where there's going to be daily payout offerings instead of the lightning funded and instant funding accounts. A lot of people really like these lightning funded accounts from Tradeify. I don't blame them. If you're a very consistent trader, You have pretty decent daily loss limit, pretty decent drawdown, a good amount of contracts for you guys to use, and you can stack these accounts. There's 5 accounts that you guys can use on top of this, and you don't even have to think about potentially passing the eval. You can just jump straight into trading how you want. So yeah, that kind of covers pretty much the majority of prop firms and how the prop firm space works and why it's beneficial for you guys. Because again, think about it like this. You're putting up $500 to potentially have access to be able to trade with $150,000 as long as you can stick within these rules. And you're going to be able to get payouts upwards of $2,500, $5,000, right? So these prop firms are a very, very advantageous tool. I would be doing you guys a disservice without being able to cover these and tell you guys the pros and cons of each of them. And again, if you guys want the Google Doc going in a lot of depth about the growth accounts, the select accounts, the lightning accounts, the zero accounts, the standard plans, and the advanced accounts, all of that is going to be in the Google Doc features. And give you guys 150K code. It's going to one the rest of these. So with that being said, I can't remember, but regardless, I will see you guys tomorrow for another video. Now that I've covered every single one of the confluence, not necessarily because we haven't put it all together and we haven't fully explained my strategy that I use yet, but also there's a couple things that we want to implement with these confluences that are going to give us probability within the market, such as understanding our daily bias, like whether we think the market is going to go you guys tomorrow for another video. Now that I've covered every single one of the confluences that I use in my strategy, you're probably thinking, awesome, I have it. Well, no, not necessarily, because we haven't put it all together and we haven't fully explained my strategy that I use yet, but also there's a couple things that we want to implement with these confluences, literally every single one of these accounts. So you guys will be your evaluation. This is your challenge. And respect it. If that gets respected, where is price probably going to draw? Down to all of these high time frame, low resistance draws and liquidity. Today was about as easy as it gets, right? We identify. I will see you guys tomorrow to our daily bias video. Explain my strategy that I use yet. But also there's a couple things that we want to implement with these confluences that are going to give us probability within the market, such as understanding our daily bias, like whether we think the market is going to go higher or lower, and then also understanding our risk management, like when we're supposed to put more risk on the table to be able to make more money, or when we should maybe de-risk because the markets are uncertain and we think that it's a low probability market. So without understanding these things, we will be overly cooked if we just jump straight into the market thinking that we know everything when we don't. So make sure you guys stay tuned for these next segments. It's going to be very important. All right, guys, welcome to our daily bias video. And this, you guys are going to learn how to find daily bias, and then hopefully we can kind of start putting together potential trade ideas in your guys' headspace. And then after this, I think we're going to cover some risk management, and then we'll finally like put together how I'm actually looking for entries. I want to cover daily bias first, because without daily bias, you don't know where the market's going to go. So how are you going to be able to look for an entry? Or how are you going to look for an entry, right? Whoa. And then if that's the case, then why the fuck are we entering in the first place if we don't know where the market wants to go, right? So it's kind of difficult. So let's get into daily bias. Let's get into daily bias. So we'll go over today's trade. Today, there was a pretty easy daily bias. And this, again, is going to start combining all of the stuff that we have already learned thus far. So let's look at the current market. What are we in? We are in an obvious downtrend, right? We are making a high, then a low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. And then that was pretty much leading us into market open. So what did we expect coming into market open? We were probably going to deliver a lower low. Now, also, on top of that, why did we assume that we were going to deliver a lower low? We have all of this low resistance draws on liquidity stacked up. We have a low right here, a low right here, a low right here, low right here, low, 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 a whole bunch of lows all stacked up throughout here. That can give us good entries for these shorts within this downtrend, right? Because draws and liquidity can be used for several different things. Draws and liquidity can be used as entries, and it can also be used as targets. So coming into today, my bias was bearish. Why? Because on the high time frame, we had a whole bunch of draws and liquidity to the downside. And on the high time frame, we were forming a downtrend. Okay, so on the hourly time frame, we were coming into this hourly fair value gap. So awesome. If this is going to continue being a downtrend, I am going to safely assume, or we need to see price come into this fair value gap and respect it. If that gets respected, where is price probably going to draw? Down to all of these high time frame, low resistance draws and liquidity. Today was about as easy as it gets, right? We identify what the high time frame is doing. Awesome. The high time frame trend is in a downtrend. We see, okay, there's very awesome draws and liquidity to the downside. That price could want to go down to target. And then from there, we look at current price action and we see, okay, we just made a high and we just made a lower low. So in turn, what is price going to need to do? It's going to retrace. And what is one of our two retrace confluences? Matter of fact, we can use both here. We use fair value gaps in equilibrium. So we see a fair value gap formed right here. Awesome. If this downtrend is going to hold, this fair value gap is going to get respected, and then we are going to target all of these lows. Let's say you didn't see this massive fair value gap and you just wanted to look at equilibrium. Well, awesome. From this high down to this low, what else do we do? We come up, we fill the fair value gap, and on top of that, we hit equilibrium, and then we deliver lower to the draws and liquidity. So that was a good example from today. Let's go and show some examples from yesterday. I want to leave my NASDAQ drawings on there because I have a call with my Blueprint students, which again, if you guys want to join the Blueprint and you guys want extra help with coaching where it's like a little bit more direct, you guys can ask me your personal questions on what happened for you guys on the charts today. I'll leave a link down in the description for you guys to get coaching from me. So let's look at this. So if we can just drag this to right here. Awesome. Let's look at the high time frames here. So high time frame, what are we in? We are in an uptrend, believe it or not, right? We have a high, then we have a higher high, and you're probably saying, oh, well, no, we made a lower low. Well, that is the case. We did make a lower low. However, this low is actually coming down and it's sweeping out this low right here. And on top of that, we are yet to break structure to the downside. So in my opinion, right, especially coming into New York market open, we know that there's going to be some forms of manipulation. We can safely assume, and again, like this is happening, all of this happens before we're even looking for a trade. So regardless, it's like, okay, we might be in a downtrend and then boom, this massive candle forms and it's like, okay, we're probably not in that downtrend anymore. So on the 1 hour time frame, what are we looking at here? Well, we see that we come down, we sweep out a high time frame low. So awesome, we get a high time frame liquidity sweep. So what do we know about this? We know that orders have been filled down here. Where does price need to go in order to get out of these orders, right? If we're buying low, where are we going to want to do? We're going to want to sell high. So if we enter into a bunch of buy orders, where is there going to be a bunch of resting buy orders for us to enter into sell orders to be able to liquidate this position right here, right? Because we got to think, we push underneath these lows. Why did we push underneath these lows? Because there was a lot of sell orders in order to fill our buy orders. So when we're going back higher and we're looking to get out of this position, we're looking where there's going to be a lot of buy orders where we can enter into sell orders to be able to get out of this buy order position right here, right? So we're trying to use reverse psychology on the market. So what do we see price do? We come up, awesome. We form this big hourly candle to the upside. We're already in an uptrend. How can we identify that? Well, we get an inverse of this hourly gap right here, and then we also get a 1 hour candlestick closure to the upside. So again, we're not going to get into entries here, but I can show you on the 5 minute time frame that even though we're forming a whole bunch of up candles, there is going to be a good enough and good retraces or a continuation trade to be taken to be able to target these highs. Because again, where does price need to go in order to liquidate the buy orders from down here, right? They need to push it above here to be able to take profit and to be able to exit out of those buy orders. So if we just go and play the rest of this candle or the next candle, we can see that the next couple candles end up pushing up and hitting full take profit or this draw on liquidity right here. If we go down to the lower time frame, again, we can see that there's plenty of opportunity within here. We see price retrace into a 5-minute fair value gap, right? There could have been longs off of that with stops underneath this candlestick, and then this could have been our take profit. We could have even gotten lower on the low time frames. We can see a low time frame 5-minute sweep of these lows right here, and then we would just be looking for a change of order flow for a break of structure to the upside. Boom, could have longed off of that, stops underneath here. First take profit, second take profit. There's a whole bunch of different ways that we could have looked for entries off of this. But again, the focus today is our daily bias. So how did I come up with our bullish daily bias today? Well, I looked and I see, okay, during pre-market, what did we do? We came down and we manipulated these lows. From there, we inverse this fair value gap on the hourly time frame. So what do I see? We're currently in a downtrend coming down. Then we sweep out a draw on liquidity where orders have the potential to get formed. And then boom, we disrespect this fair value gap, which means to me, hey, we're probably no longer going to be in bearish price action, because if we were going to be in bearish price action, we would have respected this gap and we would have continued lower to take out this low and this low. But that's not what price did. What did price do? It closed above this gap, signaling to me, hey, price wants to go higher. We just invalidated this hourly gap. And if we wanted to go lower, we would have respected it to push price down to these draws on liquidity right here. That's not what happened. And then what does price end up doing? We know that we filled orders right here. We know that the high time frame trend got invalidated right here. So where does price need to go? To the next draw on liquidity right here. All right, let's go and look at the next day. So this was Monday. Let's go ahead and let's look at some Friday price action. All right, so let's look at this. This again is pretty clean price action. Okay, we see initially we're in a downtrend, right? We break structure to the downside right here, but then when do we break structure back to the upside? Once we get a candlestick closure above this high right here. So boom, we are in a 4-hour uptrend. If we go down to the hourly time frame, it's a little bit clearer for us, right? We can see the 4-hour high is right here. We break above it, we come down, we continue higher, higher, higher. And on the 1 hour time frame, we are in a very obvious and clear uptrend. So once again, I mean, it's very, very obvious to me that what is our draw on liquidity going to be? It's going to be these highs right here, right? Now, why is that the case? Well, we are in an uptrend, and right now we are perfectly respecting the current hourly bullish order flow. We have a high right here. Awesome. We have a low right here. We push past that high. We have a higher high right here, and then we have a higher low right here. And then from there, we push up, we make a higher high, and then we're about to form another higher low. Now, coming into the market on this day, what am I going to be looking for? I'm going to be looking for some form of manipulation, because we don't really get much manipulation. And as we know, if we typically are going to want to look for some sort of manipulation, whether it's coming from London session, during Asian session, or come New York market open. We do have hourly manipulation right here, but coming into the low time frames, we don't really have much. We have these equal lows right here. Do we invalidate this gap up here? No, we don't. So me personally, I mean, it looks okay. I would want to see how these next couple candles close. So what we can do is we can play this. Can it print? Okay, so again, we're not looking for entries just yet, but I see these equal lows. Because New York market hasn't given us any form of manipulation yet, I'm going to be looking for some form of manipulation, whether it's 5-minute manipulation or an hourly manipulation of these lows down here, or again, I mean, we kind of get a sneak peek or hindsight of what price wanted to do down here. But we'll continue playing this and then see where price goes from here. Okay, so boom, just like that. Okay, let's pause it. So boom, just like that. Can this not keep printing candlesticks? So just like that, we end up coming down. Again, we know our targets are these hourly highs all the way up here. But what do we need? We need to be able to fill orders in order to get up to these hourly highs. So where do we have the potential to fill orders? Underneath these lows and underneath these lows. Because what gives us the potential to fill orders? Draws on liquidity. So if we're looking to target these highs, just like we showed in the last example, how we had a liquidity sweep, and then from there we could go up and target the highs. This is the same case, right? We need a liquidity sweep to either take out these lows and these lows in the S&P 500's case to then be able to again fill orders down here, liquidate the orders up here, right? We're pushing underneath areas where a lot of sell orders are going to get filled, and in that case we're going to fill buy orders, and then price is going to end up going up to an area where there's going to be a lot of buy orders so that we can enter into our sell orders and take profit on these positions that we're taking down here. Okay, now again, we aren't going to be entering we aren't going to be smart enough to be able to press buy right underneath these lows. However, we are going to be able to catch this move and to be able to target these highs. So again, if we just play this a little bit more, there we go. We just got a 5-minute break of structure to the upside. We just took out these highs. Awesome. Now, I don't want to jump ahead, but if we look at the hourly candle, we can see boom, sweep down, orders filled, orders filled. And then if we go down to the 5-minute, we can see boom, sweep down, orders filled, orders filled. Now we just broke 5-minute structure to the upside. Now, what am I going to be looking for? We see boom, orders got filled. We were initially in a downtrend. Now we're in an uptrend. What do I want to see following this? I want to see potential continuation so that we can go ahead and target these highs up here. So we'll play this a little bit more. And this is just giving you guys like a little sneak peek of potentially like the type of entries that we're looking for. Okay, so we get a little doji candle. Let's see if we get any sort of retracement into any of our confluences. We have a fair value gap right here. Boom, we get a big push down. Now again, just because we close underneath this gap doesn't mean that this entire uptrend is invalidated, because we have another gap right here. Matter of fact, we have another gap down here. So for this entire trend to get invalidated, we would have to invalidate this gap down here. And actually, this is a gap that I would want to target because it's underneath equilibrium. And this is actually in a discounted price range, because again, we're looking to take longs in discounted price range. So we'll see what price wants to do from here. Boom, awesome. We tapped into discounted price range and we pushed past this fair value gap. So at this point in time, I'm seeing this and I'm saying, okay, lit. We just came down, we filled the fair value gap, we filled equilibrium. From there, what am I going to be looking for? I'm finally going to be able to reposition my targets and look for these highs. And what do you freaking know? Take profit gets hit. I mean, as if the strategy wasn't given to you guys in this video. Hopefully you guys are starting to get it now. Again, what do we need in order to get up to these highs? Obviously, these highs are our draw on liquidity for the day, but we need orders, right? We need to sweep out liquidity in order to push to this draw on liquidity. How do we do that? We get into the low time frame. We see price come down underneath these hourly lows, underneath these hourly lows. Awesome. We know that we have potential to fill orders here. How do we know that orders were filled? Well, we get a break of structure to the upside on the 5-minute. From there, what are we looking for? We're looking for a continuation of the new trend that is formed. So what confluences can we use? We can use our equilibrium confluence. We can use our fair value gap confluence. Awesome. In this case, we end up closing underneath this fair value gap, but that doesn't disqualify this uptrend. Why? Because we still have equilibrium and we still have a fair value gap right here that could have potentially been tapped into for us to be able to push higher. Price comes down, pokes into equilibrium, and then, as I told you guys, we will from there look for price to move higher. What does price end up doing? Boom, moves higher, takes out our draw on liquidity. Beautiful, beautiful, beautiful. Let's show one more example of this, and then hopefully you guys will have gotten the point. So let's go ahead and put... Oh, this was a super ugly day, but... because this was the day before FOMC. Let's do a different day. Let's do 9:30. Okay, this one's a little bit difficult, but let's see what we got going on here. So, okay. So on the 4-hour time frame, what are we in? We are in a very obvious uptrend, right? We have these draws in liquidity over here. This is super high up. I remember on this trading day, I specifically was not super in favor of going long just because we had these super high draws in liquidity over here. But I mean, it is what it is. You kind of have to play with what you can get. So boom, we have these right here as well. Awesome, awesome, awesome. Okay, so on the 4-hour time frame, what do we see? Okay, awesome. We are in an uptrend. We just came down, swept out this low, invalidated this gap. Now we have a high, a low, higher high, higher low, higher high, making or forming a higher low with this action right here into this 4-hour gap. So once we're filling this 4-hour gap, what are we thinking? Okay, price either can do one of two things. We can either come down, invalidate this gap, and then from there, what are we going to be targeting? We're going to be targeting this low and this low because we're invalidating the bullish continuation confluence for price to move higher. Okay. From there, how do we know that this bullish confluence was actually pushed into and respected? Well, we start printing up, like literally up only candles from the hourly time frame. From there, we end up getting an hourly break of structure from us pushing above this hourly high right here. Okay, so we see 4-hour dip into the 4-hour fair value gap. How do we know that the 4-hour fair value gap is respected? Because we end up breaking one hour structure out of that, saying, hey, we're going to continue this higher. Now, from here, once we push above that hourly gap, we can scale down to the low time frames and identify the current trend. So we can see, awesome, we get the sweep, awesome, we have a high, low, higher high, higher low, higher high, higher low. We just finished making a higher high. So what are we probably going to do? We're probably going to make a higher low. On top of that, on market open, what did we do? We manipulated these low time frame lows. So we already got some form of manipulation. We could potentially grab a little bit more if we wanted to revisit these lows right here, or potentially this low and this low over here. Okay, there's potential for that if we end up invalidating this gap right here. So we're already in a very key position, right? Higher. Now from here, above to low and this low, because it's right here. And we are in a very obvious uptrend, right? We have these draws in liquidity over here. This is super high up. I remember on this trading day, I specifically was not super in favor of going long just because we had these super high draws in liquidity over here. But I mean, it is what it is. You kind of have to play with what you can get. So boom, we have these right here as well. Awesome, awesome, awesome. Okay, so on the 4-hour time frame, what do we see? Okay, awesome. We are in an uptrend. We just came down, swept out this low, invalidated this gap. Now we have a high, a low, higher high, higher low, higher high, making or forming a higher low with this action right here into this 4-hour gap. So once we're filling this 4-hour gap, what are we thinking? Okay, price either can do one of two things. We can either come down, invalidate this gap, and then from there, what are we going to be targeting? We're going to be targeting this low and this low because we're invalidating the bullish continuation confluence for price to move higher. Okay, From there, how do we know that this bullish confluence was actually pushed into and respected? Well, we start printing up, like literally up only candles from the hourly time frame. From there, we end up getting an hourly breakup structure from us pushing above this hourly high right here. Okay, so we see 4-hour dip into the 4-hour fair value gap. How do we know that the 4-hour fair value gap is respected? Because we end up breaking one hour structure out of that, saying, hey, we're going to continue this higher. Now, from here, once we push above that hourly gap, we can scale down to the low time frames and identify the current trend. So we can see, awesome, we get the sweep, awesome, we have a high, low, higher high, higher low, higher high, higher low. We just finished making a higher high, so what are we probably going to do? We're probably going to make a higher low. On top of that, on market open, what did we do? We manipulated these low time frame lows. So we already got some form of manipulation. We could potentially grab a little bit more if we wanted to revisit these lows right here, or potentially this low and this low over here. Okay, there's potential for that if we end up invalidating this gap right here. So we're already in a very key position, right? Because if price invalidates this gap, what then am I going to be targeting for the day? I'm going to be targeting this low, this low, this low, right? Even though my bias is bullish. However, if we end up respecting this gap and then pushing higher, I can safely assume, hey, we're probably going to want to push higher, and then I can go and try and find some lower time frame highs that I can use as like take profit points all the way through here, because I'm not going to want to set this as my one and only take profit all the way up there. Okay. So with that being said, let's play this out. Let's see what happens. Boom. So perfect. See, this is why we want to be patient. Awesome. We end up inversing this gap right here. So what do we know? Hey, we want to go lower. And unfortunately for us, when we inverse that gap, we end up taking out this low. However, we still have opportunity to go lower down to this low and this low. And then from there, maybe we can retarget these highs. But what is a key position that we are going to want to be looking for, just like how we had this gap right here? I'm going to be looking at now this gap, because again, if this is going to be bearish order flow after inversing that gap, what should price do? Price should technically come up, give us a retrace into equilibrium or into this fair value gap, and then from there, give us bearish confluences. If that's the case, awesome, we're going to go lower. However, if price comes up and then closes above this fair value gap, what can I safely assume? Price just wanted to come down, sweep out this liquidity to then send it higher, right? There's lots of conditions with this. We always are staying on top of it and looking at the trends of the markets and what current order flow we're in. So let's play it and let's see what price does. Okay, so we end up pushing slightly lower here. Let's see if price is even able to give us an entry. So we were unable to get an entry there. However, we're in, again, another advantageous point. Why? Because we just took out this draw on liquidity and now both of these draws in liquidity. So now we're in the same exact position that we were in right here. Are we going to continue lower by respecting this gap, or are we going to disrespect this gap, and then are we going to be able to target all of these highs that are up here as draws on liquidity? Well, personally, because this is our 4-hour low, and if we are going to continue respecting this 4-hour uptrend, which we just did on this bullish 4-hour candle closure to the upside, I think that we are going to be moving higher out of this liquidity sweep, right? Because we're respecting high time frame continuation confluences right here. I don't really think that we're going to come up and then boom, destroy this low, because we just put this low in as a respecting point. So I'm going to be looking at this inverse fair value gap, honestly, looking for it to get invalidated. So let's see. Okay, we don't quite invalidate it just yet. Let's see what the next candle looks like. Boom. Okay, so good at this. Boom, price invalidates this. And then from there, to be honest, like I would be willing to enter into a buy position and then just go ahead and target this high right here. And then whatever, I would look on the lower time frames and scroll all the way over here to look for other entry points. And again, this is one of these later entries where it happens a lot later in the day, and price, again, like some of these trades, again, we're just kind of like going over it and like mocking shit up. So we came up and took this out. But But hopefully you guys are getting the point. This isn't to cover entries. This is to cover daily bias. Again, we are looking at the current draws and liquidity and where price wants to go, right? We are, in this case, what were we in? We were in an uptrend on the 4 hour. We were pushing into a fair value gap. So what do we expect price to do? We expect price to respect this fair value gap and push past these highs and take out other draws and liquidity over here. Because again, how does a trend move? It moves from boom, high, okay, down to fair value gap equilibrium, then back up to what? High. Then down into what? Fair value gap or equilibrium, then back up to what? Highs. Okay, that's how uptrends move. It moves from external to internal, external to internal, external to internal. Same thing with downtrends. Okay, we move from boom, internal to external, internal to external, right? When we push into our bearish confluences, we are expecting to push down back to the lows. When we push into bearish confluences and then we get bearish confirmation, we are expected to push down to the lows. Okay, same thing when we push back, when we push underneath these lows, what are we expecting price to do? Retrace into the internal, right? Into our continuation confluences. That's the ebbs and flows of the market. Okay, we go from pushing underneath a low. Once that happens, hey, price is probably going to come up and fill a fair value gap or hit equilibrium. Once price goes up and fills a fair value gap or hits equilibrium, hey, price is probably going to want to come down and take this low out. It's the ebbs and flows of the market. It's how the market moves. And hopefully that gave you guys a better idea of how we can establish daily bias. Coming into the market, we are really just looking for where was our most recent liquidity sweep, or are we currently sweeping liquidity? On top of that, what are our high time frame imbalances and equilibrium levels that we are looking at within this current trend in the market? Let's do one more example where we don't necessarily go like full-fledged deep dive. But we can show boom. Boom. No. What did I do? Is that today? Oh, I'm an idiot. Okay. Let's look at this real quick. So, boom. We'll go right here. Awesome. So, what do we see price doing before market opens? We see price come down. Oh my goodness. We just broke hourly structure to the downside. At least that's what we're thinking at first, right? That's what we're thinking at first. We say, okay, if price is going to continue this downtrend, what does price need to do? Well, price needs to come up and it needs to fill this fair value gap, or it needs to hit equilibrium, and then it needs to continue lower, right? Correct. So price makes this fair value gap, price comes up, and then we get a down candle right here. Did that hit this fair value gap? No. Did that hit equilibrium? No. Uh-oh. And then in turn, what does that do? That creates a high. We're going to move up and a move down. So now this is the high that price has to respect in order for us to continue this downtrend. This should be the lower high. What does the hourly time frame end up doing? Boom, we rip up, we break structure to the upside. So what is that telling me? We are now in bullish order flow. So now I no longer give a fuck about this fair value gap right here. We are in bullish order flow. And where do we need to target? Boom, these highs. Now, unfortunately, price already came up and took care of business right there, right when market opened. But we can see that this is like super clean price action, right? If we go into the lower time frames, we have this high time frame draw on liquidity right here. We can see on the 5 minute, we come down, we sweep out this low right here, and then boom, we break structure to the upside. From there, we come into this 5 minute fair value gap, push down, push up, bullish confirmation that, hey, the 5 minute was previously in a downtrend. We break structure to the upside. Now we're respecting this new 5 minute trend that we made. And where are we going to want to target? These highs right here. And the rest is history. We moved a lot higher than that. So that's another good example of us like literally just looking at the high time frame trends, identifying our continuation confluences and identifying our draws and liquidity, and looking for price to either respect it or disrespect it. And then in turn, we're able to develop a bias based off of that. Okay. On top of that, we're hopefully you guys have learned from this video, we're trying to look at our potential draws and liquidity as well. So not only, and I know I make it seem like a little bit easy, but not only am I looking and seeing, okay, price came down and we push underneath these lows, so now we're in a downtrend, but we just broke structure to the upside. Once I see that break of structure to the upside, what am I immediately doing? I'm immediately looking at what potential draws and liquidity do we have to the upside for price to go up and take out. I immediately saw this high right here, which is Asia session high, and then I see this high right here, which is previous day high. So we have two significant draws and liquidity to the upside. Where is price going to want to draw towards? Those draws and liquidity. Why? Because we just broke structure to the upside right here. We are in an uptrend. We come down, we fill equilibrium. Awesome. Then on the 5 minute, we see low time frame confirmation. We are going to want to long. Beautiful, beautiful, beautiful. So that wraps up our daily bias for today. Tomorrow, I can't remember what we're covering. I think it's going to be risk management. And then I think we're ready for some executions and how to actually put this shit to work. So that being said, love and appreciate you. Appreciate you, boys. I'll see you guys tomorrow. What up, guys? And welcome to another Path to Profitability video. I'm sorry, I completely forgot to film this yesterday, and it was like, it may be because it's such like a small and short video that I forgot to film it. But yeah, sorry, forgot to, like, literally completely forgot. But today's going to be short and simple. It's going to be on risk management. There are 3 skill sets that we need to learn as traders to make us overall a profitable trader. We need strategy, which we have the bare bones now for. We've learned pretty much every single confluence that I use within the markets to be able to execute. We just haven't put it all together and how I look to execute just yet. We've also identified how we can find like daily bias in the market. So we're pretty set on strategy besides me actually giving you the full-fledged sauce. And I've been edging you guys, waiting to be able to give that to you guys, because most of the time people just watch that video and then they're just like, boom, goodbye. Like, I'm just going to take this and run. So that's why we're doing risk management before strategy. So we need strategy, we need good risk management, and then we also need good psychology. Okay. Psychology literally just means sticking to both of these things. Like, at the end of the day, people are always like, how do I get good psychology in trading? Well, it's as simple as sticking to your trading plan and sticking to your risk management plan. That's literally all psychology is. And I don't know, I think people, like, even myself included, like when I was trying to learn how to trade, and especially when I first turned profitable, I was like, rah. Psychology is the biggest and best thing that you need to learn how to do when you're day trading. But then once you actually get good at trading, you kind of start thinking about it in a different way. And you actually realize, like, okay, it's like psychology isn't like what even it fucking is psychology. So today is going to be like risk management and psychology combined. But psychology is literally just discipline, like just discipline as the skill set. And it's the discipline to be able to stick to your strategy, only take trades when your strategy presents itself, and stick to your risk management plan. Don't over risk, don't over leverage, and don't over trade. If you do these 2 things correctly, then you technically have good psychology. If you fail to stick to your trading plan, then you have bad psychology. If you fail to stick to your risk management plan, you have bad psychology. So again, for me, as somebody who has relatively good psychology within the market, I just think it's like a skill that just comes along with already being good at the other 2 skills. Like, if you stick to these 2 skills, then you automatically get this one. But if you can't stick to these two skills, then you never get this one right here. So it's kind of a weird concept, because there's literally nothing that I can get on here and tell you to do that's going to make you a better, like, to give you better psychology. Like, there's literally not one single thing. Like, I can't tell you something motivating. I can't tell you some sort of homework for you to do to make your psychology be better about trading. It's literally all dependent on you and just if you want to become a profitable trader or not. So what do I mean by that? It's literally determined on, okay, are you going to stay disciplined to the 2 things that we know for a fact creates a profitable trader? Sticking to a trading plan and using correct risk management. If you do both of these things, then you get psychology and you also will be able to become profitable. Now, it's a lot more difficult than you think to just say, yes, I'm going to stick to my strategy, and yes, I'm going to stick to my risk management plan, because we obviously, as humans, have a lot of emotional attachment to money. However, at the end of the day, if you really wanted to, if you truly want to be a full-time day trader, you would just do the things that you're required to do in order to get there. So I'm telling you right now, the only piece of psychological advice that I have for you guys as day traders is, if you want it bad enough, you will stick to your day trading strategy, and you will stick to your risk management plan, because there is no other way in the entire world that you are going to become a profitable trader without sticking to both of these. Because without sticking to both of these, then you don't have good psychology within the markets. And what does it mean by sticking to these? It means only taking a trade when your strategy presents itself, using correct risk management, which we'll talk about today. There's different variations and different ways that we can use correct risk management. And that's literally it. Like, if you stick to your strategy and if you make sure that you're risking the correct amount, you're going to be a profitable trader. Like, if your strategy based off of data through like a trading journal such as like TradeZella proves to you through statistics that you have a positive win rate and a positive risk to reward ratio, you are a profitable trader. And all you have to do is stick to that strategy that has a proven probability in the market, and just use correct risk. Like, use a consistent risk that is not going to blow your account if you lose a couple trades in a row. Use a consistent risk that isn't going to blow your account if you have a losing month or another losing month after that, right? We just want to be using a consistent amount of risk that is going to, again, with the stats provided from our strategy, going to make us a profitable day trader. So again, psychology, as like, I know you guys are probably watching this video and you're probably thinking, well, damn, like I thought psychology was like a huge thing in trading. It is, it really is. It's massive in trading, and it's why the majority of people are unable to turn profitable. But at the end of the day, it's not something that you can like work on or grow. It's just like, do you want to turn profitable or not? It's like, if you want to turn profitable, then you stick to your strategy and you stick to your risk management plan. And you kind of just have to be real with yourself. And you're probably saying, well, I want to turn profitable, but my psychology still sucks. Well, it's because you're thinking about trading in the wrong way. Okay, so it's not your psychology. You're thinking, I want to get rich quick. And if you're thinking, how can I get rich quick? That's going to be by taking trades that aren't in line with your strategy, because you're going to be trying to take as many trades as possible. And that also means ramping up the leverage and ramping up your risk every single trading day so that you can win more on a trade and get rich quick. So in turn, what are you doing? You're breaking both strategy and risk management. So again, do you want to turn profitable or not? And hopefully this goes without saying, trading is not something that is going to get you rich quick. Okay, if you think that you're going to get into trading and make a shit ton of money within the span of a couple months, you're in the wrong business, dude, and you're not in the right space. So I hate to break it to you, if you thought you were going to get into trading and become a freaking billionaire within the first couple months, you should look into buying lottery tickets, because there's literally nothing else in the world that can do that for you besides potentially winning the lottery. And that's the harsh reality of literally any of these high income skill sets. It's you just have to put in a lot of work, and you have to gain the skill first, which takes a lot of time. And then from there, once you have the skill, it's going to take time to build up your capital. And then from there, you're going to be able to reap the rewards of the skill set. Like for me, bro, like I just recently within my own trading was able to start reaping the rewards of the skill set of trading. Like if you look back to me like fucking 2 or 3 years ago, like I was not trading with the size that I am now. I was not making nearly as much money from trading as I am now. And that's just point blank period, like how it works. You just like scale with time. And a lot of people, like some of you guys may be first time viewers on here, and you just think that I spawned in here like 2 months ago and magically like just had all of this money, and that's not the case. You know, it's a culmination of years of work to be able to get to this point. So The reason why I'm saying that is because a lot of you guys think that you're just going to be in my position at the end of this year. And I would be lying to you if I told you that that was possible. You're able to do what I've done with my life for sure, but it's going to take a lot of time and it's going to take a lot of effort. So that's really all psychology is. Psychology is just being like point blank, period, honest with yourself and saying, hey, I know that this is going to take a long time. I know I need to focus on the skill set of trading. And I know that the only way for me to turn profitable is by sticking to the strategy that gives me a probability in the market and then sticking to a risk management plan that makes sure that when I'm using the strategy, I don't blow the account and I live to trade another day. And then from there, it's just going to be slow stacking. And there's a bunch of companies and softwares that are able to help low income or low capital individuals to be able to scale a lot quicker, like funded accounts, like we talked about in yesterday's video or the day prior's video. So again, like I'm not saying that it's impossible to scale up quickly. I'm just saying it's going to take time. And that's all psychology is being brutally honest with yourself, understanding that this is going to take time for me to learn the skill set of trading. And the only way for me to turn profitable with trading is by sticking to my strategy and sticking to a risk management plan. So with that being said, let's go over risk management again. Dude, like realistically, strategy is like the most complicated thing within trading. At the end of the day, guys, trading is very simple. Like you find a strategy that gives you a probability within the market, and then you find a risk management plan that is able to sustain that strategy within the win rate and within the risk to reward so that you can live to trade another day so that you're not blowing your account when you go on a little losing streak. And you just have to stick to those two things. Like when you put it like that, trading is pretty freaking simple. So for me, for my risk management, like I used to do the whole thing of like calculate 1% of your balance and then I'm going to only risk 1% of my account balance per trade on this. And for each person, it's going to be different depending on what their risk tolerance is. But for me, I moved away from doing like, hey, I'm going to be risking like only 1% of my account balance per trade. And I just went to, I'm going to risk this amount of contracts per trade. It just makes my life a lot easier. So I'm not thinking and having to pull up like a lot size calculator or a contract size calculator. It just makes it a lot easier of just like, okay, whenever I press buy, whenever I press sell, it's going to be the same amount of contracts for NASDAQ. And then I have the number of contracts on ES that I'm going to be using. And it just makes my life a lot easier. And if you guys are trading on a live account, I would recommend you guys do the same. You want to find the number of contracts that is a safe amount for you to be risking for your account balance. Okay, so that doesn't mean you're risking 10% of your account balance per trade. That doesn't mean you're risking freaking 20% of your account balance. That doesn't mean that you're risking 5% of your account balance. Usually the sweet spot is anywhere between like 1 to 3% if you can find a contract size that, again, when we're looking at the charts, like you can literally just find, hey, what's my typical stop loss size? So on this trade that I took today that ended up being a big win, my stop loss size on ES was around 16 ticks, right? So I can keep that in my mind. I'm like, awesome. On this trade, it was 16 ticks. And then I can look back to another short position that I maybe had on the S&P 500. And on this trade, it was 34 ticks. And then on another trade, it was like 28 ticks. So I can say, okay, on this trade, we had a relatively tight stop loss. So on this position, you know, we're going to be risking whatever, like three contracts. So this will be like the bare minimum that I'm going to lose because this is going to be the lowest amount. And then if I'm risking 3 contracts on this, you know, how much am I going to lose when it hits a 35 tick stop loss? And then as long as I'm comfortable with both of those numbers, obviously for the smaller stop loss, it's going to be a much more comfortable number. But as long as we're comfortable with like kind of the largest stop loss, like stop loss amount that we're going to be typically using on a trade to trade basis, then that's all that matters, right? And again, like us going up to, you know, 35 ticks, that could potentially be risking like 3 or 4% of the account. But I'm willing to do that because, again, if I'm risking 3 to 4% of the account and then I'm only getting like a 1-to-1 risk to reward ratio, you know, I'm still able to get a 3% gain on this. And then if I lose, doesn't really matter that much because whatever I get stopped out, I lose 3%. But then on a trade like this, where I have a much tighter stop loss with probably a higher risk to reward, I'm not going to be risking as much as I am on the higher risk, lower risk to reward trades, but I'm going to be making more. Like on this trade, we hit full take profit. So this was a 1 to 4.81 risk to reward. So again, I'm risking less, but I'm in turn either making a little bit more on this trade or pretty much the exact same as a 1-to-1 risk to reward on a larger stop loss. So at the end of the day, it always ends up like evening out by using the same contract size. Now, I would like to preface one thing. If I do have, there's a couple times when I change the contract size. So one time is if the stop loss is like very drastically larger than usual, then I'm going to just cut the contract size in half. And then the other times are when we see fundamental data. So if we look and we see, hey, today there was PPI news data. So, the market is going to be a little bit more choppy and I'm not so sure about how the market's looking today. Then what am I going to do? I just say to myself, hey, I don't really like the way that the fundamentals are looking on the news. So what am I going to do? I'm just going to cut my contract size in half. Okay, that's really how I do it. It's made my life so much easier instead of like panicking, having another browser open for the contract size calculator. It just makes my life a lot easier. Now, as for funded accounts, you're probably saying, okay, that's for live accounts. What about for funded accounts? So funded accounts is going to be determined on a prop firm to prop firm basis. So a company to company basis, and also dependent on what accounts you are trading on. So let's say you're trading on Alpha Futures, for example. Alpha Futures, they have a little bit of a larger drawdown for you to be trading in, and then also a easier consistency rule to stick to. Versus Tradeify, they are going to have a tighter consistency rule and not as large of a drawdown, but in turn, those accounts are going to be cheaper, right? There's pros and cons for each prop firm. But what you guys need to do is again, it's unfortunate because I wish I could be like, oh yeah, this is like the one-stop shop and like the one way to use proper risk management on funded accounts. But unfortunately, every single prop firm is different. Some prop firms, there's trailing drawdown. Some prop firms, there's trailing end of the day drawdown. Some prop firms, there's no trailing drawdown. Some prop firms, there's trailing equity drawdown. Some prop firms, it's on a $150,000 account. It's a $3,000 drawdown. Some prop firms on a $150,000 account, it's a $5,000 drawdown. So every single prop firm is going to be very, very different when it comes to using correct risk management. So you're just going to have to look. I know this fucking sucks, but you're literally just going to have to look yourself at the rules on what account you are trading on. And you're going to have to see for yourself, okay, how am I going to manage my risk with one, the consistency rule that they have, because that's very important, especially if they have consistency rule on the challenge and then also a consistency rule on the payouts. And then on top of that, I need to be looking, hey, is my drawdown trailing with the equity of the account? Is my drawdown going to be trailing by the end of the day on the account? Is how large is the amount of drawdown that this company is giving me? So all of those things are things that you need to take note of and be very conscious of when you are trading on prop firms. And in turn, everybody's risk management plan is going to be a little bit differently. Even on top of that, your risk management plan is going to be a little bit different from the challenge account to the live account where you're going to be eligible for a payout. Most people, what they do is they'll get on the challenge account and they will pretty much do the max amount of risk for them to be able to pass the account in as few trades as possible, right? Because they're just trying to get through the evaluation phase as quick as possible. And then once they get through the evaluation phase, once they're on the live account and they're eligible for a payout, what will they do then? Then they'll scale back the risk because they're like, okay, this is the showtime. This is time for me to, again, I don't want to blow this on one single trade. Versus the eval, they're willing to potentially blow it on one single trade because they're like, hey, I'm just trying to pass this as quick as possible. But once you pass it, that's when it's like, hey, let's pull on the reins here. We want to potentially, we want to be trading a little bit less risky because we have the opportunity to get a payout now. So all in all, that is risk management and psychology explained. Tomorrow, we're going to go over strategy, and then that is going to be a wrap for the path to profitability. hopefully you guys have enjoyed the series so far. It's been fun for me to make, and unfortunately tomorrow it's going to come to a close. So now you guys are finally ready for me to reveal my full day trading strategy that I use on a daily basis to help me make money and give me high probability within these financial markets. Now, one thing that I ask you guys is, once you guys fully understand the strategy, I don't want you guys to just jump in with real money straight away. Again, I want you guys to use a demo account. I want you guys to practice this, because it's one thing to sit here to watch and learn from the education, but it's another thing to go practice it. An analogy that I like to use is, think about a basketball player. If a basketball player sits down and watches a 9-hour long basketball training video that just teaches him how to do all the moves, versus if we took somebody and told them to go play basketball and gave them a bunch of drills to do on the actual court for 9 hours, who is probably going to get better? Probably the person that's actually doing the drills. Now, what happens if we had someone do both? That's when they're going to be very, very good, because they're going to learn how to do it correctly, and then they're going to go and apply it. So that's exactly what you guys are going through right now. You guys are learning how to do it correctly, but now you need to go and apply it. So before you guys jump in by buying a funded accounts and, trying to trade with your own money, there are tools that we have for a reason to help us understand these markets. And again, maybe some of you guys are still struggling while after learning the strategy. That's completely fine. That's actually why I have a mentorship in place to help students like you guys. Again, I put out so much free content, but sometimes the free content isn't going to solve your specific personal questions, because how am I supposed to make a individual YouTube video for your specific problems and be able to give you specific personal solutions to your problems? It's absolutely impossible. I can't spend all day going through YouTube comments and saying, oh yeah, this is how you do this, that, the third, because one, my time is super valuable, and two, then people would be asking me questions all day 24/7 in the YouTube comments, and I would just get completely caught up with it. So that's why I want to give you guys the opportunity to join my one-on-one mentorship. There's going to be a link down in the description. And again, that's only if you guys are having trouble, and you guys can literally just wait until after watching through this entire video, practicing yourself. And if you guys are still having trouble, then you guys can come back to me and say, hey, I'm having some issues and I want to see if I can become one of your students, and then we can see if you're going to be a good fit. But from here, we're going to jump into the strategy. I hope you guys are ready. All right, guys, welcome to our very last episode of Path to Profitability, where we put everything together and give you guys the strategy that you guys have been waiting your entire lives to learn, the strategy that's going to make you $1 million. Just kidding. It's not true. Okay, so before we get into the actual strategy, this is what we need to preface beforehand. Just because you know the step-by-step of how to enter a trade, does that mean you're instantly going to be able to make money from trading? No. Second thing, the second thing is that even though you have the strategy, we need to have risk management and we need to have psychology in check in order to be a profitable trader. Because again, we need all three skill sets in order to be profitable as a full-time day trader. We need strategy, we need risk management, and we need good psychology. Okay, without all three of those, we are unable to be a full-time profitable trader. Now, another thing that I want to preface, and this is something that I'm going to do a little bit differently than I have in the past. Most of the time when I do these strategy videos, I'm like, this is step 1, step 2, step 3, step 4. And then I'll go ahead and I'll post like a trade recap. And, granted that those other strategy videos are pretty dated and whatever, like my strategy has changed since then. People will be like, hey, well, you didn't wait for this to happen in your strategy, or hey, you skipped over this step. And that's the problem with when mentors get on here and teach you guys their day trading strategy that helps them make money. We are trying to make it in like the easiest and most digestible way possible. In reality, a lot of strategy and a lot of trading comes down to like just overall like market experience. So there could be some times, like for the most part, I'm following the same steps every single time, but there might be one day where I, instead of scaling down to the 5 minute, I scale down to the 1 minute and I try and take a lower time frame trade. Or instead of waiting for this confirmation, I wait for another confirmation. And that's like more of the discretionary side of this, because in reality, if we wanted to just make some sort of like trading bot that automated our strategy, that like, and if that strategy actually gave us like 100% profitable results over a long period of time, then awesome, everybody would be able to get rich. And that's kind of the last thing that I wanted to talk about before getting into this. Just because you have this strategy doesn't mean that, you know, you're just instantly going to be a profitable trader. Trading is a lot more than that. It comes with a lot of market experience. It comes with watching the charts for hours and hours and hours over and over and over from market open to market open. And there's a lot of variables that go into being able to predict when price action is good, being able to predict or, you know, like decide whether to size up in your risk management, whether to size down. And all of these things are factors that play into whether or not you actually end up being a profitable trader or not. And really the only thing that is going to be able to give you that skill of discretion and that skill of market experience is quite literally putting in the time and effort required to be able to earn that skill, which is just looking at the charts and getting repetitions in. Because again, this is like I relate these series and like these YouTube videos to like let's say LeBron James made a basketball pre-training guide, right? And he gives you every single tip and trick required that he did when he was growing up to be able to become the best basketball player in the world. Just because he gave you guys that blueprint, does that mean you're able to sit down, watch those videos, not take any action, and then end up becoming like LeBron James? No. What needs to happen after you watch the videos? Well, you need to actually go out and do the exact same amount of work and put in the exact same amount of effort to even one, have the possibility of getting close to him in terms of skill. And then there's a whole bunch of other stuff that's involved, like whatever, genetics and just real like basketball IQ. And it's the same thing with trading, right? So like I can get on here and I can explain my strategy and I can tell you, hey, you need to do this, you need to do this, you need to spend this amount of hours doing this. You need to make sure that you understand this concept, this concept, this concept. And then you need to put a shit ton of time into the charts. And that's how you're going to be able to make money from trading long term. I've already done that, and I continue to put in hours on the charts. But for you guys, it's like just watching these YouTube videos and just digesting the content is not going to make you a profitable trader. It's one step. It gives you the knowledge required. But once you get the knowledge, you need to act on the knowledge that you got. And then you start making more mistakes, and then you learn from those mistakes. So getting the correct information is one thing, but then going from, okay, now I have the information, to actually taking action on the information that was given to you, that's a whole other thing.
I'll be back, chat. Y'all give me one moment, bro. Alright, chat, we booted up with the food, dude.
And that's where most people end up fucking up. And that's where most people end up going wrong is like they get the information and then they get it in like this edutainment format where they're like, oh, life is so great. I just learned the best strategy that's going to turn me profitable. So now I don't have to do any work and I don't have to practice this. I don't have to back test. I don't have to journal. I don't have to do anything. And I'm just going to take one trade a day every single day on market open and hope and pray for the best. And it's like, you're going to suck at trading for your entire life. If you do that, you need to put in the hours required to be able to drill out this strategy, to be able to understand the strategy correctly, and to get yourself in the right headspace to genuinely just like be good at trading. You need to put the hours in. There's a rule. It's like the 10,000 hour rule. If you want to be a master of something, you have to put 10,000 hours into it. You know, and the more, the better. If you think about Kobe Bryant, like he was, rest in peace. He was one of like the best to show and prove that rule. He put in probably the most amount of work and just had the craziest work ethic out of all of like the great basketball players ever. And it showed, right? He showed up, put in well over 10,000 hours worth of work and became a master of his craft. It's the exact same thing with trading. And it's the exact same thing with anything that you're trying to pursue, right? You can't just say, hey, I'm going to sit here and watch a couple of YouTube videos because guess what? This YouTube video, you know, by the time the year is up, will probably have well over 100,000 views. But you really think that 100,000 people are going to watch this video and then proceed to put in the 10,000 hours that's required to end up becoming a profitable trader? Probably not. So if it was easy as just sitting here and watching a YouTube video and then boom, we're all millionaires, I wish that was the case, but it's not the case. I need to be open and honest with you about how this shit works. And that's the truth. It's one thing to get the information. That's what this video is here for you to get the information required to be able to build a good strategy, to be able to build maybe some sort of discretionary trading plan. But then from there, it's up to you to actually trade and make the mistakes, learn from those mistakes, grow from the mistakes, make mistakes, learn from those lessons, ideally never make them again. And then that's how we become a better trader. So for me, I learned this strategy. I taught myself this strategy based off these confluences that I've learned from a bunch of other people in the space, and then kind of made this into my own strategy that has worked for me and has made me a profitable trader. And I put in the hours required to be able to test this and then to be able to actually make money from this. You guys need to do the exact same. So whether you guys learn the confluences and then maybe want to twist this in a little bit of different way. And then that's the last thing. I'm not going to give you, like I was saying, like a step-by-step, hey, this. I'm just going to give you the overall ideations of how I'm going to be looking at trades. So what I'm looking at when I'm looking for my daily bias, what I'm looking at for when I'm looking to enter, and how I'm using the certain confluences that I've taught you guys throughout this entire series to be able to make those predictions and to be able to make highly probable decisions within the market on a daily basis, because that's our goal with trading. Because again, from what I found in the past is like you give people like, hey, step 1, step 2, step 3, step 4. Then I do a trade recap and then they're like, hey, you skipped this step. Is this a new strategy? And it's like, ugh. Like, no, that was just like literally 5 years plus of trading experience telling me, hey, I've seen this shit before. We should probably scale down to the lower time frame and take a shorter time frame trade instead of waiting for a higher time frame confirmation, because there's a bunch of draws and liquidity that are about to get hit. So I know that there's not going to be a higher time frame confirmation. So I'm going to scale down so I can at least get into this trade so I can make some profit. Right? Like that thought process only comes from being able to, that thought process will only be built by putting the time required, by seeing market open so many times, and by seeing these candles print for years and years and years, for hours and hours and hours, for days and days and days. That's literally the only way that you're able to make adjustments like that. And then at the end of the day, when you really get down to think about it, it's like, okay, so what was the trade taken off of the strategy, or was it taken off of discretion? And that's the big kicker with all of this. And I don't want to ramble, but I just really want you guys to understand this, where it's like, what I'm going to teach you today is the ideation and the thought process of how my strategy is constructed. Okay, we go from orders being filled to change in order flow to continuation of the new trend. And I'm looking to enter and I'm looking to target other draws in liquidity or internal draws in liquidity. Because in my head, it's orders have been filled or orders have potential to get filled. How do we know orders have been filled? We see a change in order flow or a change in market structure. And then how do we know that change in market structure is going to hold? We see continuation of that market structure. And then where am I going to target where those orders that were filled up there or down here can be exited, right? So that's going to be at draws in liquidity or imbalanced price action. So that's how I think about my strategy when creating it. And I'll show you guys, or when I was creating it, and I'll show you guys a couple examples on the chart. And I'll write down like the step by step, but you guys have to know and understand. And this is why I'm not going to be like, hey, you look at this time frame first, and then you look down on this time frame, and then you look on this time frame, because like the second that you don't do that exact step by step, the comment section is going berserk saying you didn't follow your strategy. And it's like, shut up, bro. Like, I know what my strategy is, and I changed it so that I was able to be able to take advantage of this price action that was in my favor. It's like I'm making sound decisions based off of what I've seen the market do for fucking 7 years now. And you're like talking about you changed your strategy, and it just drives me nuts. So we're not going to do the step-by-step strategy. Look at this time frame and wait for this, and then you have to do this right after this. It's going to be, this is how I built my strategy, and this is how I think about the markets and how the markets should be moving on a daily basis. And this is how I look for entries, okay? And you guys will be able to get a pretty good gist of what I'm looking for on a daily basis and how I'm able to construct this and how I'm able to construct my thoughts when I'm looking at the markets. I'm not just going to give you like step 1, step 2, step 3, because 1, people fuck that up all the time. And then 2, they leave no room for any discretionary trading. And that's what I want to leave room for you guys to be able to do, is to be able to let your mind like flow and let your mind actually be able to see the candlesticks get printed and actually force yourselves to put in the time required on the chart to be able to understand why price is moving the way that it is, why price didn't want to go hit this draw on liquidity compared to this one. All of those things are very important things for you guys to know. And I feel like as your mentor, I should purposely omit little pieces from this strategy video so that you go out and learn them yourself. And it's not like that I'm leaving the shit out like because it's so valuable and it's like some secret sauce. It's like, no, I'm not going to tell you to do certain things because there's some things that shouldn't have very strict constraints on it. Like, hey, we can only enter when this happens, then this happens. Like, no, I want you guys to be more of like a free little pony prancing through the rain and just having all these confluences in your arsenal like a toolbox. So every single day there's a different set of blueprints that are set down. You have all the tools and you have all the materials to be able to build what the blueprint is. But every single time, you're probably not going to be using the same tools because the blueprints are different. The tools and materials are the same, but you might not need a wrench to be able to build whatever the blueprints say on this day. And then the following day, you know, you might need the wrench, but you might not need the hammer, right? That's how I want you guys to think about how we have our confluences, how we build out our daily biases when we're looking at the market, because the market's a different market every single day. That's one of the awesome things about trading. But that's also one of the difficult things about trading is we have to constantly be adapting to the new things that the market's giving us. So by unrestraining and unrestricting ourselves to, hey, you have to follow this super fucking strictly, it allows us to adapt to the market. So here we are on the S&P 500. S&P 500. 500. So let's imagine that we are right here. Okay. Market is literally within the next millisecond going to open. Okay. This 30-minute candle just closed, which means market is open. Okay. We obviously can't see the market open candle forming, but market is now open. What am I going to be looking at? Well, the first thing that I'm going to be looking at is where are our draws on liquidity for the day? Because again, what is my thought process? And I'm kind of going to break this down while we're going through this trade that I took on Friday so that you guys can get a good gist of what I'm looking for trades, okay, and how I break this down. So the first thing that I'm looking for is, have we swept out liquidity yet? Where are our draws on liquidity? And what point are we at within current market structure? Okay. So on the S&P 500, this candle, it doesn't look like this. It's just formed like this because of the trade replay. But on the high time frames, we are continuing this 4-hour bullish market structure. Okay, so we come up, we fill this gap, we see extensions out of it. However, we form a down candle right here. Same thing here on NASDAQ. However, we actually disrespect this gap. However, there's one gap underneath it, so it's not a full-fledged disrespect of the bullish order flow that we're in. We are actually just filling equilibrium from this low up to this high. Okay, so we filled equilibrium, we respected it, we moved up. So at this point in time, I'm seeing on the high time frame, we're in bullish order flow. Okay, we inverse this top gap right here, right? So we move down, we inverse this top gap, and now we're respecting this 4-hour equilibrium. And on the S&P 500, same situation, we inverse this top gap. So previously we were in a downtrend, but then we inverse this top gap. We also broke structure to the upside. So boom, we know that, hey, we're in an uptrend now. And how do we confirm that we're in an uptrend? We come down, we fill this gap, and then we see legs up out of it. So awesome. That's my first thought process. That's the first thing that I'm thinking when I see all of that go down. So I say, cool, but that's before, way before market open. From there, we're going to be looking at Asia session. What else can we do? We can look at previous day highs, which are right here. And then we have previous day lows, I believe. Nope, these were previous day lows all the way down here.
What's good, chat? How you doing? Hope
Okay.
you're doing well. I'm doing good.
So we sorry, right here.
I don't know why, but my
What day is this? Thursday? Sorry. I'm getting all mixed up. There it is. Okay. We previous day high, previous day low. Boom.
my graphs aren't printing.
What else can we look at? Well, we can identify, boom, we have Asia session low from this new day that we opened.
My shit not.
We
loading.
have London session low right here. And then we have, let's see right here, this is London session high. Awesome. So right now we're in bullish market structure on the 4-hour. We came down, we filled this continuation confluence. We're seeing legs up. Me personally, coming into this day, I'm pretty bullish. Okay. Why? Because we have draws and liquidity to the upside, right? We have London session high right here. We've got some hourly highs stacked up right here. We also have previous day high all the way up here. Okay, this is previous day low. This is Asia session low. And this is London session low. So, what did I just do? What's the first step of finding my strategy? Well, it's daily bias, and we had a daily bias video like 2 days ago. Okay, so I'm looking to, one, identify the high time frame trend, identify at what point in time are we in the high time frame trend. So at this point in time, what are we in? We were filling an imbalance and we were seeing extensions out of it, right? So for me, I'm like, okay, cool. We're filling imbalances. We're probably going to want to seek out some form of external draw on liquidity because that's how trends move, right? If we're in an uptrend, which right now we are, we inverse this gap, we come down, we respect the 4-hour gap, and then we start seeing legs out of it. Awesome. Our targets should be up here, right? So the first thing that I'm doing is Doing that, identifying what order flow are we in on the 4 hour and on the 1 hour. Okay. The next thing that I'm going to want to do, sorry, disregard that massive candle. That hasn't happened yet. The next thing that I'm going to want to do is identify all of our draws on liquidity for the day. So what did I just do? I went in and I said, okay, we have previous day high right here. We have previous day low down here. We have a session low right here, which is Asia session. We have session high right here, which is London session high. We have a session low right here, which is London session low. Asia session high had already been pushed past London session highs and there was no reaction off of it. So in turn, that draw on liquidity is pretty useless for us. Same thing here on the S&P 500. We have London session high. We have previous day high. We have Asia session low. We have London session low. And then we can even mark out these hourly highs right here that look pretty good. So now we have identified the high time frame trend that we're in and we identified the draws and liquidity. So me personally, what am I going to want to see? Especially right now, because we're in an uptrend, I'm going to want to see candles out of and reacting bullishly again. Disregard this hourly candle right now. Let's imagine as if we can't even see this. But I want to see price start reversing up because right now on the S&P 500, we're in a downtrend. And on NASDAQ at this point in time, we're actually in an uptrend. This candle shouldn't look like this right now. But at this point in time, we are in an uptrend. And actually, even better for us is we are sweeping out liquidity to the downside on the 1 hour. So for me, I'm thinking, hey, if we can get confluences to the upside, that to me means that, hey, we're going to want to come up and take out all of these very solid draws in liquidity, right? We got London high, we got hourly high, previous day high. All of these highs up here look great, right? And we just recently saw that price came down and swept out these lows, and now we're reversing. And awesome, we already hit one of our draws on liquidity, but market is just opening, so we weren't able to take a trade on that. Maybe we can take a trade to be able to target some of these highs. So the first two things is I establish my bias, okay? So my bias today is bullish. I'm looking at all of these highs here, all right? The second thing that I do is identify the key draws and liquidity. Now, again, what are draws and liquidity? Areas where price has the potential to fill orders, okay, to cause reversals, right? So with that in mind, I'm looking at these draws and liquidity as one of two things, okay? Entries and targets. Right now, we just pushed up above this Friday's high. On the S&P 500, London session high on the S&P 500, we're significantly underneath this high right now. What is a concept that we learned when we are pushing above a high on one of the indexes and then below a high on another one of the indexes? An SMT divergence, specifically a bearish SMT divergence. So, even though we are in bullish market structure on the 4 hour time frame and we're respecting bullish market structure and I probably want these highs, what do I have to consider? I have to consider that, hey, we might be potentially sweeping out these orders right here, missing these orders right here and forming an SMT divergence from this high down to this high, from this high up to this high. And what is the S&P 500 telling us about NASDAQ? That, hey, we probably want to go down and we actually might want to take out these London lows, these Asia session lows, maybe even the previous day lows all the way down here, right? So with that in mind, let's play the market out a little bit and let's see where we end up going. All right, so we'll play this. Boom. This candlestick forms. Does this give us any real overall sense of where the market's going to go or what decision the market has made?
Oh,
not really, right? This is a pretty indecisive candlestick. The S&P 500, we are still remaining underneath these high time frame highs. So for me, I see this and I see that we're underneath these high time frame highs. I'm thinking, hey man, we're still above these highs on NASDAQ and we're still underneath these highs. My bias is still the same. I would potentially want some sort of high time frame entry to take buy positions, but I have to be conscious of a potential bearish SMT. So from there, let's play it a little bit more. Boom. Okay. So from here, we end up getting, boom, another down candle. So now I'm thinking, okay, we've made
I'm done for the day, bro. I'm done for the day, bro. I'm done for the day. Because I don't know, bro. It's just like I got work tomorrow. It's already like 6 in the afternoon. I've been kind of like doing this for the past like 2 hours. Really 2 hours and 40 minutes. Been 2 hours and 47 minutes. But I know I was playing around for like 30 minutes, went out like 30 to 40 minutes. Maybe less than that, honestly. I don't know, man. Today wasn't really shit for real. He talked about the funded accounts, talked about the market times, talked about daily bias, but didn't really give me nothing for real that I could make notes off of. I don't know, bro. We didn't learn nothing yesterday because I didn't study yesterday, but no rush. There's no rush to, you feel me? No rush, bro. I still got time. Plenty of time, gang. But I don't know, bro. It's just like it's towards the end of the video. Oh shit. He's talking about his strategy, but he's still like, I don't know. Maybe my learning style and his teaching style are like quite a bit different. He's talking still as if we know what the fuck he's talking about. And I don't know. So, what I'm gonna do in the stream here, go ahead and transition into something more intriguing, which is gonna be playing Fort, the new season of Fort. Maybe I could try to get good at Fort. I haven't been playing my I might play my Roblox game for a little bit too. So we're gonna see. We're gonna see. I appreciate y'all for tapping in. If y'all enjoyed this episode of learning how to trade, then y'all should have probably liked the stream and tune in. Maybe subscribe? Question mark. Something like that, man. But with all that being said, I love y'all. I hope y'all have a wonderful rest of y'all's day. And I'll see y'all in our next stream.